My promise to you. Today, we're gonna learn to recognize a few of the most common candlestick formations like pros. And we're gonna do this so we can start spotting signals earlier and therefore make faster but also smarter trading decisions. It's really amazing to see that you have decided to invest your time, energy, and attention in learning a lifelong valuable skill like trading. For those of you who have never seen me before, hi, I'm Caro Trading. I'm a volume price analysis trader in the making, sharing what I learn as I go in the simplest way possible. So if you ever felt like trading was something confusing, overwhelming, and not for you simply because you don't have a finance degree, for example, I'm here to simplify it and help you achieve what you thought was unimaginable. And as always, don't believe anything I say. Verify it through your own experience. In this chapter, we're going to be crossing this bridge, where we will be learning the most common candlestick that you're going to see on any chart, regardless of what you're trading. And once you master these candlestick formations, you're going to be good to go. You may be wondering, what is my goal in teaching you this for free? And the thing is, I want to save you time. At this point, I've analyzed hundreds of charts, from hundreds of stocks to futures and many cryptocurrencies, which is actually where I started. And when I was analyzing chart after chart after chart, I actually came across one specific pattern. I noticed that they had one thing in common. They had certain shapes and patterns in common, regardless of the time frame that I was on and regardless of the instrument that I was looking at. And then when I made a list of the patterns that I saw, I noticed that, wait, there are 16 candlestick formations that I keep seeing over and over again. And it turns out that when reading those 16 candlestick shapes became second nature, reading charts got stupid simple. And I'm going to teach you these 16 candlestick formations so you don't waste time how I did. Now, there is a little challenge to this. There is such thing as too much information at once. And so to avoid this happening to us, I actually found a solution for this. What we're going to be doing is we will divide the workload into two separate chapters. By dividing the workload, we're going to increase our chances of absorbing it all. We're going to avoid getting overwhelmed. We can stay focused for longer. And the best of all, everything is going to feel easy and manageable. This means that in this chapter, we're going to focus on the first 8 candlestick formations that we need to master. And for each candlestick, we're going to look at 3 things. First of all, we're going to look at the visual characteristics. How can we recognize a candlestick in our charts? How does it look like? What is the outfit that it's wearing? We're going to look at what happened during the move. Did the buyer step in? Did the seller step in? When did the buyer step in? When did the seller step in? And thirdly, we're going to take a look at how do we interpret this candlestick correctly? Because that's all we want to do as traders. We want to give it the accurate interpretation so that we can take accurate trading decisions. To do all of this, we first must agree on the language. And here's why speaking the same language matters. If we don't get this right, we'd all be visualizing something completely different. And that only leads to confusion, and we don't want that. But if we do it right, learning becomes clear and useful. The most important thing to understand is that learning to trade with the right terminology directly impacts our ability to read the market correctly and make money, which again, it's all we want to do. We want to read the market correctly so we can make money. That's why you're watching this YouTube video, because you want to learn a skill of reading the markets correctly and therefore making a little bit of extra money. Now, here are some words that we gotta know. And by knowing these words, we are equipping ourselves to speak real trader language. Now, I'm gonna go quickly through what buyers and sellers are, because we have extensively talked about this in the previous chapters up until now. But for those people that have randomly clicked on this video, and this is the very first time you're hearing these concepts, this one's for you. Buyers are the ones creating demand. So they are the ones pushing the price up, and they are also known as the bulls. On the other hand, we have the sellers. The sellers are not the one creating demand, but instead they're the ones creating supply. So they're not pushing the price up, but they're pushing the price down. And on the one hand, you have the bulls, which are the buyers, which means the sellers would be called the bears. Now, another word you're gonna hear a lot from many traders in the trading community is strong sentiment. There's a strong sentiment going on. And a strong sentiment fundamentally means that one side is clearly winning. If we were to translate this to the scenario of the tug of war, it essentially means that one team is yanking the rope far across the line, which would look something like this, where we can clearly see that one team is winning and even the girls are falling, which means that there's something called weak sentiment. If strong sentiment is when one side is clearly winning, then that means that weak sentiment is when one side is barely winning. And when we translate this to the tug of war scenario, it means that yes, both teams are pulling, but the rope is barely moving across the line. And it would look something like this, where you see that both teams are really trying so hard, but the middle of the rope is simply not moving. This is when you have weak sentiment, like there's no clear direction that the rope is going to. Now, when we tie these concepts together, the concepts of buyers and sellers, and then the concepts of strong sentiment versus weak sentiment, we actually get 4 new concepts that guaranteed you're also going to hear very often. On the buyer side, you then have the concept of strong bullish sentiment. And in simple words, it means that the buyers are clearly winning. So if you have strong bullish sentiment, that means that you also have weak bullish sentiment. And that means that the buyers are barely winning. Now, translating this from the seller's perspective, a strong bearish sentiment would then mean that the sellers are clearly winning, which means that a weak bearish sentiment would mean that the sellers are barely winning. Now, other words that you're going to hear often are the long upper wick, for example, where it's when a candlestick has a long vertical line above the body. So take a look at the picture below where you see a vertical line on top of the compressed rectangle. This is how a long upper wick looks like on your charts, which means that we also have something called a short upper wick, which is when a candlestick has a short vertical line also above the body. So the only difference is that the vertical line is short, but they're both above the rectangle, which means that we also have something called a long lower wick, which is when a candlestick has a long vertical line below the body. It kind of looks like a hammer, which means that we also have something called short lower wick, which is when a candlestick has a short vertical line also below the body. So the only difference is the length of the vertical line that is below the rectangle. People often talk about the market showing either strength or weakness. This is also something you're going to hear a lot. There's a lot of strength or there's a lot of weakness going on in the market. And it turns out that whenever people express themselves like that, it's usually from the buyer's perspective. So this means that if buyers are losing, people are going to say there's weakness in the market, even if the sellers are winning. So yes, the sellers are strong, but the buyers are weak. Therefore, it's being said that there's weakness in the market, which means that if the buyers are winning, people often say, hey, there's strength in the market, even if the sellers are losing. So whenever there is a sign of something, a sign of strength or a sign of weakness, try to see it from the buyer's perspective. Are the buyers strong? Then there is a sign of strength. Are the buyers weak? Then there is a sign of weakness. And disclaimer, I didn't invent any of these terms. This is just the language that traders use, and sometimes the best thing that we can do is to adapt. And that's exactly what we're gonna do. So now that we're on the same page with the terms, let's get our hands dirty and master some candlesticks. The first candlestick on our list is the wide spread up green candlestick. How can we visually recognize this candlestick on our charts? We can recognize it because it has a long body. So the rectangle is wide, it's spread out. We also have an instance where the closing is higher than the opening. And this is what makes the candle of green color. It's a bullish candlestick. And usually it has little to no wicks on either side, and when comparing where the price started to where it ended, the buyers clearly won. Now, there is a common misconception where people often mistakenly state that, hey, there are no upper wicks, so buyers were always in control and there was absolutely no selling resistance. Because if there were some selling resistance, wouldn't I see an upper wick? And as logic as that may sound, that's not always true. It turns out that this candle has many different ways in which it could have been formed. In general, we do have the following. We know that during the move, the buyer stepped in a lot. And I say a lot because the rectangle is wide. And yes, sellers might have stepped in, undoing the buyer's work temporarily. And this stepping in of the sellers would have created an upper wick temporarily. But even if the seller stepped in, buyers regained control and showed strength overall. And when the buyer stepped in again, they erased the temporary upper wick that was created due to the seller's resistance. Truth be told, guys, we can only see what really happened inside of this candlestick by dissecting it on the faster time frames. This is a skill that we learned in the previous chapter. So if you haven't watched it, I'm gonna pin it up right so that you can go watch and learn how to use multiple time frames, because it's really going to help you in your trading journey. What is the interpretation of this wide spread up candlestick? We know that the buyers clearly stepped in, and yes, sellers might have stepped in as well, creating the so-called temporary upper wick. Even if that happened, the buyer stepped in again. Overall, the buyers had enough strength to have a final score in their favor. So there is clear sentiment in one direction, and it's not in the seller's direction, it's in the buyer's direction. And for this reason, we can say that this is a sign of strength. And I put bullish in between brackets because it's as a reminder that please, when it's a sign of strength or a weakness, see it from the buyer's perspective. So because the buyers are clearly winning here, when you look at the final score, it's a sign of strength. And what this essentially means for what is likely to happen with the price is that the price is likely to continue going up. And the reason for this is because the buyers have the upper hand. It's very likely that the buyers are going to continue having the upper hand for the next candle or the next two candles. It's like they have enough gasoline in the tank that they can still continue with some of the momentum that they have left. They're not going to make a sharp stop. Now let's go to the second candlestick, which is the wide spread down candlestick. How can we visually recognize this candlestick on our charts? It has a long body where the closing is lower than the opening price, not higher, but lower. And as a consequence of this, the color of the candlestick is red, is a bearish candlestick. Usually it has little to no wicks on either side, and when you compare where the price started to where it ended, the sellers clearly won. And once again, there is the common misconception where people think that, hey, there are no lower wicks, so that means that the sellers were always in control and they didn't have to struggle at all with some resistance from the buyers. I know that this can sound very logical, but the truth is, this isn't always true, because this candlestick also has many different ways in which it could have been formed. Either way, we can say that during the move, the seller stepped in a lot. Not a little bit, but a lot, because it's a widespread down candlestick. We know that yes, the buyers might have stepped in, undoing some of the seller's work temporarily, and this would have created a temporary lower wick. But even if the buyers stepped in temporarily, the sellers then regained control and showed strength overall. And when the sellers regained control, that lower wick got erased. Again, guys, I'm gonna say this over and over again until it gets imprinted in your mind. We can only see what really happened inside of this candlestick by dissecting it on the faster time frames. How do we interpret this widespread down candlestick? We know that the sellers clearly stepped in. And yes, the buyers might have stepped in. And if so, the sellers stepped in again. Overall, the sellers had enough strength to have the final score in their favor, because when you compare the opening price with the closing price, the sellers clearly won. So in this case, there is a clear sentiment in one direction, and it's not in the buyer's direction. Instead, it's in the seller's direction, which means that the buyers are weak. So let me ask you something. Would this widespread down candlestick be considered as a sign of strength or as a sign of weakness? This would be considered as a sign of weakness because the buyers are weak. And remember, you analyze the charts from the buyer's perspective because that's the language that people decided to use. So this is usually considered a sign of weakness. And what this means for what is likely to happen with the price is that the price is likely to continue going down. And the reason for this is because the sellers have so much momentum still that they're not gonna make a hard stop right away. They're gonna keep going until the gasoline tank empties little by little. And if you take a look at the chart, that's exactly what happened. The buyer stepped in a little bit in the next candle, but then the seller stepped in again. So the seller still had some momentum going on. Now let's go to the third candlestick, which is the narrow spread up candlestick. What is the outfit of this candlestick? How does it look like on our charts? It has a small body where the closing is higher than the opening price, but ever so slightly. And because the closing is higher than the opening price, the color of the candle is green. So it's a bullish candlestick. Usually it has little to no wicks on either side, and when we compare where the price started to where it ended, the buyers won, but the buyers barely won when we compare it to the widespread down candlestick that we saw earlier on. And for this one also, there are many different ways in which it could have been formed. So we know that during the move, the buyers stepped in, but only a little bit, not as much as how they did with the widespread down candlestick. And yes, sellers might have stepped in during the printing of this candlestick, undoing the work of the buyers temporarily. This would have created a temporary lower wick. But even if this happened, the buyers stepped in again, they regained control and showed strength overall. Not a lot, but a little bit. And again, you guessed it, we can only see if the sellers stepped in during the printing of this candle by dissecting this puppy on faster time frames. How do we interpret this narrow spread down candlestick? We know that the buyers barely stepped in, and we know that, yeah, sure, the sellers might have stepped in, and even if they did, the buyers stepped in again. Overall, the buyers had enough strength to have a final score in their favor. By a little bit, not by a lot, but by a little bit. So in this case, there is a sentiment in one direction, which is in the buyer's direction, but the sentiment is weak. It's not like the buyer buyers are clearly winning. The buyers are like, winning. Therefore, this is a sign of strength, but of weak strength, because the buyers are not incredibly strong, you know? They're not like the Hulk. They're like a tiny chihuahua strong, but they're still strong. And that's when you hear people say that it's a sign of mild or weak strength. And what this usually means for what is likely to happen with the price next is that the price is likely to continue going up, but not as likely as when we see a wide spread up candlestick. And this is the reason why I gave it a 1 out of 3 arrows of the likelihood of the price going up. Candlestick number 4, the narrow spread down candlestick. The visual characteristics of the candlesticks is that it has a small body where the closing is lower than the opening price. Not very lower, slightly lower. Because of this, the candlestick is of red color. It's a bearish candlestick. Usually it has little to no wicks on either side, and when we compare where the price started to where it ended, the sellers barely won. And again, there's more than one way in which this candlestick could have been formed. So we can say that during the move, the seller stepped in a bit. Not a lot, but a bit, because if the seller stepped in a lot, it would be a wide spread down candlestick, or it would have a long lower wick. And it is possible that the sellers might have stepped in during the printing of this candlestick and therefore undoing the seller's work temporarily. You know, this would have created a temporary lower wick. But even if this happened, the seller stepped in again. They regained control and showed a little bit of strength overall. Not a lot of strength, but a little bit of strength. And you guessed it, whether the buyers offered some resistance during the printing of this candle can only be confirmed by opening this candlestick on a faster time frame. So how do we interpret this narrow spread on candlestick? We know that the sellers barely stepped in. And yes, the buyers might have stepped in, you know, creating the lower wick. And even if that happened, the seller stepped in again, undoing that temporary lower wick. Overall, the sellers had enough strength to have a final score in their favor. Not by a lot, but by a little bit. So in this case, there's also sentiment in one direction, which is in the seller's direction. But it's not like the sellers are clearly winning. They're like, winning. So there is weak sentiment in the seller's direction. So in this case, if I were to ask you, is this a sign of strength or is this a sign of weakness? What would you say and why? The answer is, in this case, there is a sign of weakness, because from the buyer's perspective, the buyers are weak because the sellers are winning. And what this means for us when it comes to what is likely to happen to the price next is that the chances are there that the price is likely to continue going down, but not as likely compared to when we have a wide spread down candlestick, which is why I gave this a 1 out of 3 arrows when it comes to the probability of the price continue going down. It's not guaranteed that the price is going to continue going down. Candlestick number 5, the shooting star. This is my favorite one. The visual characteristics of the shooting star are, it has a small body, so the rectangle is compressed, where the body is near the bottom of the candlestick. So not near the middle and not near the top. It's near the bottom of the candlestick. It has a long upper wick, being much longer than the body itself, and usually it has a very short lower wick. The key to remember this shooting star candlestick is that it sits at the top of the hill. Imagine a hill and that the shooting star is at the top of the hill. For me, this didn't make a lot of sense. For me, what made more sense was to envision a Christmas tree. And the reason why this worked for me is because the price is following the shape of the Christmas tree, and exactly where the price goes from rising to falling, that's where the shooting star lies. The most important thing to remember is that the price has to shift from going upwards to going downwards, and at the top of that shift, that's where the candlestick sits. That's where you have to envision a star. Now, the key story for this candlestick lies in the upper wick. So let's take a look at what the upper wick tells us. We know that somewhere during the move, the buyers pushed the price up, so there was bullish sentiment. And we know this happened because there is an upper wick, and the upper wick is telling us that at some point the price was at this high level. But then the seller stepped in, erasing almost all of the upward move. So there was a bearish sentiment, and this is what created the upper wick, going from bullish sentiment to bearish sentiment. So we know that the buyers failed to sustain those higher prices. So there was a strong sentiment from bullish to bearish, where the final sentiment is bearish, and this is the key part of the story. The final sentiment is bearish. So what does the sentiment switch looks like when I say that we went from bullish to bearish? This is the candlestick that we're looking at. This is a shooting star, and we're going to focus on the formation of the upper wick. We know that to create the upper wick, the buyers had to step in, where the buyers were stronger than the sellers, therefore the buyers pushed the price up. But we also know that the price was not sustained at those higher levels, which means that then then the sellers stepped in because the sellers became stronger than the buyers, slamming the price back down. Overall, it is the buyers that failed to keep control at those higher prices. And because the buyers failed, what do you think this is a sign of? Is this a sign of strength or is it a sign of weakness if the buyers failed? Because the buyers failed, this is a sign of weakness. So even though the candle is green, it's a sign of weakness. So instead of prioritizing the color of the candlestick, prioritize reading the wick itself. And what this candlestick means when it comes to what is likely to happen with the price is that the chances are there that the price is going to continue going down. And how likely it is to happen, it depends on the next candlestick, but it also depends on how deep the upper wick is. The longer the upper wick, the more the seller stepped in, the higher the sign of weakness, the higher the likelihood of the price continue going down. This is a game of probability, guys. There's no certainty in trading. Candlestick number 6, the hammer candlestick. You can recognize this candlestick because it has a small body. So just like the shooting star, this one also has a compressed rectangle. But the difference is that the small body with the hammer is near the top of the candle, not near the center and not near the bottom, near the top of the candle, where it has a long lower wick, which is much longer than the body, and usually it has a very short upper wick. And the key to the hammer candle is that it sits at the bottom of the valley. Now, I couldn't find another analogy, so I'm gonna depict a valley with a hammer in the middle. This makes absolutely no sense, but I hope that because it's so random and that it makes no sense that it's gonna stick with your brain. Just imagine a valley where the price follows the shape of the valley, and right at the dip, imagine a hammer. And once again, the secret of the story is in the lower wick. We know that somewhere during the move, the sellers pushed the price down. So there was bearish sentiment. And we know this because there is a lower wick. So we know that at some point, the price was at these lower levels. But we also know that the price weren't sustained at this level. We know that the buyer stepped in, erasing almost all of the downward move. So there was bullish sentiment. And this is when the lower wick got created. So in this case, the sellers failed to sustain those lower prices, where there was a strong switch in sentiment from bearish to bullish. So the final sentiment is bullish. And again, this is the key to the story. What is the final sentiment of the story? What was the second half of the match, so to speak? A good way to visualize this switch in sentiment is by taking the candlestick, and we're gonna take a look at the lower wick. We know that for the creation of the lower wick, first the sellers had to step in because the sellers were stronger than the buyers. That's what caused the price to go down. Now, we know that the price did not hold at these lower levels. At some point, the buyers had to step in because that's what creates the lower wick. So at some point, the buyers became stronger than the sellers, pushing the price up. So in this instance, the buyers were successful in regaining a big chunk of the control. Now, if I were to ask you, what type of sign is this? Is this a sign of strength or is this a sign of weakness given that the buyers were successful? The answer is this is a sign of strength. And how strong this sign is depends on many factors. It depends on how does the candle look like that is printed afterwards. If this candle is followed by a wide spread of candlestick, then that's a confirmation that yes, the buyers are incredibly strong. And it also depends on the depth of the lower wick. The longer the lower wick, the more the buyers regain control, the stronger the sign of strength. In essence, what this means for us when it comes to what is likely to happen with the price next is that it's likely that the price is going to increase. It's going to go up. Now, I'm going to give you a little secret when it comes to the shooting star candlestick and the hammer candlestick. And the secret is as follows. Don't let the color fool you. The wick tells the truth. The wick is the footprint of the losing side. Oftentimes, people are going to think, hey, this candle is green, so the buyers are in control, so it must be a sign of strength. No. Yes, the candle might be green, but the upper wick is showing us that the buyers failed to sustain higher prices, meaning the sellers are gaining momentum. Therefore, it's not a sign of strength, guys. It's a sign of weakness, which means that in the other scenario, it's the same thing. People often think that, okay, this candlestick is red, so which means that sellers are in control, so obviously it must be a sign of weakness, right? No. Because sure, the candle might be red, but the lower wick is clearly telling us that the sellers failed to sustain the lower prices, meaning the buyers are gaining momentum, and therefore it's a sign of strength. Try to detach your yourself from this bias, this emotional bias that we have towards colors. And a great hack that I learned earlier on, and I'm teaching it to you, is change the color settings on your chart. So instead of having candlesticks that are green and red, change to neutral colors such as gray and orange or blue and purple, for example. Because that way you're not gonna automatically think subconsciously that, hey, it's red, so sellers are in control. It's gonna make it easier for you to trade at the beginning. Candlestick number 7, the 2-bar reversal from bearish to bullish. What are the visual characteristics of this pattern? 2-bar reversals are characterized by having 2 candlesticks. They're gonna be side by side and they're about the same size. They don't have to be exactly the same size, they're more or less the same size. When we have a 2-bar reversal from bearish to bullish, the first candle is red and the second candle is green. And in this case, the bullish candle pushes hard in the opposite direction, undoing the work of the bearish candlestick. And a true 2-bar reversal leads to a change in direction. So in this case, from falling price to a rising price. If the price keeps falling after seeing this pattern, then it wasn't really a 2-bar reversal, because for it to be considered a reversal, the price has to reverse. It has to go from falling to rising or rising to falling. So if in this case, the price keeps falling, it was just a minor bounce. So what happened during the move? We know that during the move, the sellers had the upper hand during the first candle, obviously because it's a wide spread on candlestick. And we know that the buyers came in swinging in the second candlestick, where they completely moved the price back up and undid all of the work from the sellers in that very first candle. So in this case, there was a power shift from sellers to buyers. And once again, guys, the only way to see the full fight is to dissect these candles on the faster time frames. So how do we interpret this specific 2-bar reversal? We know that the sellers were in the lead in the first candlestick, but then the buyers took over and they're now in control. So there was a shift in momentum from bearish to bullish, where the final sentiment is bullish. So if the final sentiment is bullish, was this a sign of strength or was this a sign of weakness? This was a sign of strength. And what does it mean in terms of what is likely to happen next with the price? It means that chances are there that the price is going to continue going up. And lastly, the 2-bar reversal from bullish to bearish. How can we visually recognize this 2-bar reversal on our charts? You're going to see 2 candlesticks next to each other. So they're going to be side by side. They're going to be about the same size. It doesn't have to be exactly identical. They don't have to be identical twins. They're like, a girl's eyebrows. They're cousins, not twins. Where the first candlestick is green and the second candlestick is red. So in this case, the bearish candle pushes hard in the opposite direction, undoing the work of the bullish candlestick. And again, a true 2-bar reversal leads to a change in direction. In this case, from rising price to falling price. And in this specific example, if the price keeps rising, then that means that this was never a 2-bar reversal after all. It was a minor bounce during the uptrend. Also, we can say that during the move, the buyers were in control, pushing the price up. So this is what happened in the first candle. But then in the next candle, the seller stepped in with force, pulling the price all the way back down and raising the buyer's progress. So that second candle, is showing us the moment that control framed from buyers to sellers. And again, to see the full back and forth, we must zoom in by using faster time frames. So how do we interpret this 2-bar reversal from bullish to bearish? We know that the buyers were in the lead in the first candle, but then the sellers took over and the sellers are now in control. In this case, there is a clear shift in momentum from bullish to bearish. If the final sentiment is bearish, guys, would this be considered a sign of strength or a sign of weakness? The answer is, this is considered a sign of weakness. And what this means for us in terms of what is likely to happen with the price next is the chances are high that the price is going to start going down. It doesn't mean that whenever you see a bullish candlestick and then a bearish candlestick that the price automatically is going to go down. No, it depends on multiple factors that you have to take into consideration. Don't jump into the conclusion that whenever you see this pattern, boom, the price is going to go down. Wow, we did it. Congratulations. We have learned the following formations that are going to set us up for success. So now these names, they have to become very familiar to you. We looked at the wide spread up candlestick, the wide spread down, the narrow spread up, the narrow spread down, the shooting star. Remember, that's the Christmas tree, the hammer, the 2-bar reversal from bullish to bearish, and the 2-bar reversal from bearish to bullish. I have one more invitation for you. And this is my invitation as someone that genuinely cares for your success. Right after watching this video, open up a chart. any chart, it doesn't matter what it is, and try to spot these formations. So try to find your first shooting star, try to identify your first hammer, your first 2-bar reversals. And the biggest piece of advice is treat it like a game that you enjoy. So instead of finding Waldo, try to find the bullish to bearish 2-bar reversal. Now, you might be wondering, why would I do this? And the answer is because mastery comes from volume. I don't mean from trading volume. I mean from doing many reps of anything. To get what you want, you have to deserve what you want. The beauty of this, guys, is that no one can learn from another person. I cannot learn to do a pull-up for you. You cannot learn to do a pull-up for me. The same way I cannot learn to trade for you and you cannot learn to trade for me. So this skill is truly a gift from you to you. So if you put in the effort, there's only one possible outcome. The outcome being that you're gonna reap the benefits, and that's an amazing thing to do. Speaking of benefits, let's see what's awaiting us for the next session. In the next session, we're going to break down the last 8 candlestick setups so the charts start making even more sense to us before we introduce volume. And really, guys, remember, enjoy the process as much as you can. It's not about the final goal. It's not about becoming a millionaire. It's not about the amount of money, because money cannot buy happiness. It's about the process. I really genuinely mean it. Thank you so much for your time, and enjoy the process, unless you've got other plans.